Hey everyone, Professor Lee here, and today I want to talk to you about the three main reasons why students fail to claim or maximize the American Opportunity Credit. If you don't know what the American Opportunity Credit is, go look at my previous video where I talk about what it is, who qualifies, and how to calculate it. In this video, I want to address what the IRS said. They said millions of students are missing this credit every year, resulting in hundreds of millions of dollars of unclaimed tax credits. That's crazy numbers. Let's talk about why students miss it. So the first reason that I see all the time is students that receive federal Pell Grants or other scholarships that offset their tuition don't claim the credit, where there are certain strategies they can apply to claim the credit. And let's talk about those. As an example, we have Olivia Lerner, who she has tuition of $8,500 and scholarships and grants of $12,000. This can happen to married students when they receive Pell Grants and maybe have other scholarships. And so in this case, when calculating the American Opportunity Credit, she would have negative net expenses, meaning she wouldn't get the credit. So what we have to do is look at her scholarship and grant detail, because what the law allows is if you have any non-tuition scholarships, meaning a scholarship that even if it's used for tuition, as long as it could be used for other things like room and board, then you could recognize it as income. Pell Grants are always included as the non-tuition scholarships that can be recognized as income. So in Olivia's scholarships and grant detail, it's usually included at the bottom of Form 1098T. You need to look, and we see that she has a tuition scholarship for $6,000 and a Pell Grant for $6,000. In her situation, she can allocate up to $6,000 to income in order to increase her net education expenses. Let's look at how that works. So when calculating her credit, she starts with her total qualified education expenses, which was her tuition, plus required course materials, which was like her books and other required materials. So her total qualified education expenses would be $8,700. But then we have to net out any scholarships and grants she received, which was $12,000. So she has negative $3,300 in net qualified education expenses. To max out the credit, she needs $4,000 to get the max American Opportunity Credit. It's not always the most beneficial to max out that credit. That's more detail than needed, but because she's in the negative, if she put this into a tax software, her 1098T, she's actually going to need to recognize $3,300 as income and wouldn't get the credit at all. Well, what I'm going to tell you is most students in this situation want to recognize more than $3,300 as income. And you're like, wow, that's counterintuitive. Why? Because that's going to increase their tax due, right? Well, the credit that they can receive is much bigger than the extra tax they owe. So this is what it looks like. Because she only had $6,000 of Pell Grants, she would love to allocate $7,300 to get up to that max of $4,000, but she can't because you can only allocate the non-tuition scholarships and Pell Grants. Okay, so in this case, she can allocate up to $6,000 as income. So instead of the required $3,300, she's going to allocate $2,700 more. And the reason is now, when calculating her net qualified education expenses, she doesn't have to subtract $12,000. She only has to subtract $6,000, giving her $2,700 in net expenses. What does that result in for her credit? Well, she's going to get a credit of, there's her net expenses of $2,700. Her American Opportunity Credit is going to equal 100% of the first $2,000, so she gets $2,000, and then 25% of the next $2,000, which was $175, so 25% of 700 is $175. So her total American Opportunity Credit is potentially $2,175. I say potentially because $1,305 of that amount is non-refundable, meaning that amount can only offset any tax she already owes. So if she owes no tax, if she's below the standard deduction for income or whatever it is, then she could not claim that non-refundable part. But that $870 refundable, she's guaranteed as a refund. Okay, so you can see students, rather than getting zero credit, she can potentially have a credit of up to $2,175 and maybe owe, if she's 10% tax bracket, an additional $600 in tax. Students in this situation almost always are better off when they allocate. But it's important to consider all factors, but that's a big reason why I see students miss it, especially a married couple. I have a married couple come in and one missed $4,000 the other night on 1 year because they both had scholarships and grants that exceeded their tuition. We did the allocation and got them the credit. They missed that the majority of the time. The second reason students often miss the credit is because parents can claim their kids as a dependent if they're a full-time student up until they're 23. Okay, so if they're in college and they're still claimed as a dependent, what gets tricky is the parent actually has to claim the credit on their tax return rather than the student. The reason that it's missed is there's a disconnect there, because if the student receives the form and never gives it to their parent, they don't know to claim it, or there's just lack of education there, they don't get the credit. Parents often get the bigger credits because of that non-refundable portion we just looked at, that $1,305. Parents often owe tax, so they would be able to claim that $1,305 plus the $870. I see huge credits come out of this situation where the parents failed to claim the credit because the student didn't know to give them the 1098-T. Okay? What if the student's in a situation like Olivia? It gets tricky because you have to do things with both tax returns. So for the parents, they could claim the credit like we calculated, that $2,175. Olivia, on her return, she actually has to recognize that scholarship income on her separate return, not her parents' return. So the strategy has to be done on 2 returns. This is such a valuable credit for parents that are claiming their college students as a dependent. If you're a dependent, get this 1098-T to your parents. The third one that I see all the time is independent students. So their parents aren't claiming them. They have a job, they're making money or something, and they just fail to put it in their tax return. They get the 1098-T emailed to them from their university, and they just fail to put it in. In that case, they don't get the credit. And sometimes I just have them in class, and they're like, yeah, I just didn't know to put it in. Go back and claim it, and they get $1,000, right? Independent students are a little tricky because if they don't have enough earned income, so their earned income must exceed 1/2 of their support. If their earned income is too low, it doesn't exceed half their support, they can't claim the refundable portion. Remember, I broke it out between non-refundable and refundable. They can't claim that refundable portion if they don't have enough earned income. If they have enough earned income, they're fine, but if not, they can't claim it. So if someone else is supporting you and you're like, I want to file independent, sometimes your parents can get up to $3,000 and they could split it with you or whatever if they claim you. But that's if they're supporting you, right? If they meet the other, and they don't necessarily have to support you, but as long as you're not supporting yourself, then they could potentially claim you. Those are the 3 main reasons I see students miss thousands and thousands of dollars. Just in my life, I see students miss it as I'm teaching them. So what if you were one of those students? Okay, what if you missed or failed to maximize the credit? You're like, wow, that situation applies to me. Well, what can you do? You can amend your return up to 3 years. So you can go back 3 years, and if you missed it, claim it. I had one student, taught it to him senior year. He was like, wow, I've missed that 3 years. His parents were actually claiming him, so they got almost $2,500 per year, and then he claimed it in the 4th year. Nearly $10,000 in 1 year. That could be you. And every semester I have a student in class that gets $4,000, so I guarantee a lot of you have missed it. I've seen students get thousands back by amending. So, how do you know if you missed it? Well, in the link in the description, I have a free college student tax credit maximizer where you can estimate what you've missed and what you would need to do to maximize that credit. So go look at that link. It's free to use to get a free estimate of, gosh, did I miss this credit? And go claim those credits that you've missed, because I know hundreds of thousands of students that miss these. So next video, we're going to look at a case study of a married student couple that received over $4,000 in 1 year.